Welcome back. In today's explainer, we are unpacking a really critical and honestly often fatal operational failure that founders make, when they're transitioning a scrappy micro-business into a unified formal corporate structure. I like to call this the net salary trap. You see, when you finally gain the statutory right to execute formal labor contracts, you actually introduce a massive vulnerability into your corporate treasury. Managing human capital at scale, it requires absolute precision in your payroll architecture. Because if you get it wrong, well, the consequences are absolutely disastrous.
Seriously, think about this for a second. Why do fast-growing, incredibly successful companies suddenly go bankrupt right after hiring a massive, talented team? It's a catastrophic failure rate, and it catches so many executives completely off guard. They do everything right? They secure funding, they scale the workforce, revenue is pouring in, and yet they're suddenly bleeding cash. Well, the answer almost always lies in how they negotiated those new salaries. Too often, leaders negotiate based entirely on the net salary, the actual cash in the employee's hand. But they do this without understanding the complex statutory mathematics required to actually fund that final payout.
Let's get into Section 1, the Payroll Iceberg. Visible pay versus hidden corporate costs.
So to build a scalable payroll system, a CFO really has to distinguish between two fundamentally different categories of labor taxes. First, there's the personal income tax, or PIT. This is a direct tax on the individual's income. Legally, the employee bears this economic burden. The company just acts as the withholding agent, meaning you deduct it from their gross salary before paying them. But then, you've got the hidden danger lurking below the waterline, the social tax. Now, this is strictly an employer burden. It's a corporate operating expense meant to fund pensions and Social Security. And here's the kicker. It is absolutely not a deduction from the employee's salary. Instead, it's levied directly on your company as a statutory percentage. Depending on where you are, that's often 20 to 25%, and it gets calculated right on top of the gross salary.
Which brings us to our next section, the mathematical trap, because you simply cannot calculate backwards.
All right, the crucial point here is understanding what we call the gross-up calculation. Listen, the absolute worst financial mistake an executive can make is promising an employee a net salary and assuming they can just multiply that net number by the tax percentages to figure out the taxes. You literally cannot calculate statutory taxes backwards from a net figure. It just doesn't work like that. Taxes are legally assessed on the gross salary. So if you promise a net payout, your financial team has to execute this gross-up calculation. Let's break down exactly how this works mathematically. You take the desired net salary and you divide it by 1 minus the effective PIT rate. Boom, that gives you your true legal gross salary. This specific formula is the exact financial architecture required to survive a net salary promise. If you skip this step, your entire financial foundation is, quite frankly, fundamentally flawed.
Okay, let's see how this actually plays out in a real-world boardroom scenario. Imagine this. Step 1. The promise. You agree to pay a top-tier engineer exactly 10,000 TJS. That's our local currency unit here, net, cash in their pocket. Sounds great, right? Now step 2, the gross up. Assuming a flat 12% pit rate for this example, we divide 10,000 by 0.88. That gives us 11,363 TJS. This number right here is the official gross salary that goes into the contract. Now for step 3, the employer's social tax. Assuming a 25% rate, we calculate this on top of the gross. So 25% of 11,363 TJS is 2,840 TJS. And finally, step 4, the corporate reality. You add that gross of 11,363 to the social tax of 2,840, and your total cost? A whopping 14,203 TJS.
Yep, 42%. Let that sink in. To put exactly 10,000 TJS into your employee's pocket, your corporate treasury has to burn 14,203 TJS in actual physical cash. I know it hurts to hear. Take a deep breath. This represents a massive, hidden 42% margin markup on the salary you originally promised. It is a staggering reality check for literally any executive negotiating compensation.
So where exactly is all that money going? Well, your promised net salary of 10,000 TJS is completely swallowed up by that towering 14,203 TJS total employer cost reality. It's entirely driven by the employee pit of 1,363 plus that massive employer social tax of 2,840. This right here is the net salary trap in full undeniable effect.
Moving right along to the next part, unit economics, the death of margins.
Here is the harsh truth. If that total employer cost is ignored, your business is going to hemorrhage liquidity with every single product sold or service rendered. Remember that opening question we had about why fast-growing companies suddenly go bankrupt? Well, here's your answer. Founders will often price their retail products or their B2B services based on the net salaries they were used to paying back when they were a smaller, maybe shadow economy micro-business. They completely ignore the gross-up and the statutory social tax markup. When you legalize your human capital and actually start scaling, your CFO absolutely must embed that total employer cost, the full 14,203 TJS, not the 10,000 TJS net, directly into the cost of goods sold. Because if this hidden 42% markup just gets absorbed by the company's net profit instead of being baked into the commercial retail price, you're going to bleed cash until there's absolutely nothing left.
Okay, let's talk solutions. The automated solution, professional corporate governance.
Look, managing this complex gross-up math, along with all the varied statutory deductions and tax compliance for a growing workforce, doing all that on manual spreadsheets, it literally guarantees catastrophic auditing errors. It's basically a ticking time bomb built entirely out of VLOOKUPs, and it exposes your company to massive wage theft liabilities. Professional corporate governance demands automation. Systems like Odoo ERP's dynamic payslips completely replace those old manual spreadsheets. The exact moment an HR manager types in the negotiated gross, or even just the target net salary, Odoo dynamically and automatically executes all that gross-up math we just talked about. It computes the exact PIT withholding, and it calculates the employer's social tax in real time, all based on the current statutory rules.
And the brilliance of it doesn't stop at the payslip. The moment you confirm that payslip, the system splits the cash flows automatically. The net salary gets routed flawlessly to account 3350 for employee wages payable. The withheld PIT and the calculated employer social tax, those are routed directly to accounts 3310 and 3390 for statutory tax payables. But here is the most important part for your survival. The total employer cost is immediately mapped directly to the correct cost of goods sold or operating expense departmental budget. It instantly updates your unit economics so you know exactly what your margins are in real time. No guessing.
Transform human capital from an unpredictable liability into a strictly measurable, profitable corporate asset. By mastering this gross versus net mathematics and automating your payroll via an ERP system, you achieve this vital transformation. This is the ultimate goal here. When you truly master your payroll architecture, hiring stops being this terrifying drain on your treasury, and it actually becomes the growth engine it was always supposed to be.
So I'm going to leave you with this final provocative thought to chew on today. Is your pricing strategy actually surviving the gross-up markup, or are you secretly bleeding liquidity with every single sale? If you've been negotiating net salaries without doing the gross-up math, you need to urgently audit your payroll structure today. Revisit your unit economics, check your true employer costs, and please make sure you aren't falling victim to the net salary trap. Thank you so much for joining me for this explainer, and I really hope this empowers you to scale your business with total precision and absolute confidence.